Good afternoon. Time to have a look at what happened in the markets in Asia. Those particular markets happened to close mixed, and the biggest news out of that particular area is the higher than expected GDP numbers that came out of Australia. Nonetheless, when we look at the Nikkei, that was up 0.4%. The Hang Seng in Hong Kong are marginally down, but when we look at the Chinese mainland markets, they closed negative for the day. The Shanghai Composite down 0.7%. The Shenzhen Composite also following suit in negative territory, down 1.2%. When we look at what's happening on the European side, those markets right now inching higher. This, of course, there's still some cautious optimism when it comes to that recovery. And at this particular point, investors are still digesting economic data that's filtering through out of that particular region. FTSE 100 marginally lower. When we look at the French CAC, that is in positive territory, up 0.1%. German DAX also in positive territory, up 0.1% as well. But when we look at the US futures, a little muted right now after that start that we had yesterday. And when we bring it locally and we look at what happened on the South African side, news out of ShopRite that they will be letting go of their Nigerian operations to a local investor. This after having been in that country for 16 years. So looking at that particular share price, that up 3.4%. But to look at what everything is doing when it comes to the overall markets, the themes, the actual sentiments moving markets at this particular point, we are joined by Michael Traherne, who is from Vestec Asset Management. Michael, thank you so much for your time.
Great to be here, Anastasia.
So let's look at the current JSE performance right now. And also, did you manage to get a look at the Rand?
Yeah, so I mean, the market's up at the moment, only 0.16, not much higher. But I think the broader story here is that the JSE All Share was up 7 months in a row now, with the month end coming on Monday. It officially closed 1.5% higher for May. Are we going to see it break 70,000 points for the first time? Currently at 69,000 points and 35. So it's got close. It's been flirting with that 70,000 mark for a few months now. Fingers crossed that we get there. Moving on to currencies, currently dollar rand at 13.75. So we've held below the 14 rand level now for about a week, and that shows you how the rand is linked to commodity prices, and the strong commodity prices have been really, really good for our currency.
Over the past few weeks, we've been talking about, the debate as to whether, taper might happen this year or next year, what inflation looks like. But when you consider, the prospect of central banks, rather in the developed markets, scaling back their loose monetary policy, what do you foresee the impact being on the rand?
Sure. I don't think I'm brave enough to forecast currency movements, but let me give you the theory anyway. The theory is that if your interest rates go up, your currency should get stronger. And the rationale for that is that higher interest rates means that more money flows into your country to buy your country's bonds. And as money flows into the country to take advantage of those high interest rates, your currency gets stronger. It is worth noting, though, that because developed nations have issued so much debt over the last 12 months, that any change in interest rates will significantly change their interest burden. And in fact, it could actually lead to a weak debt to GDP ratio because of that increased debt burden and interest burden. So there's a reason to believe that developed markets, as they increase rates, their currencies will strengthen, but there's an equally strong argument that their currency could weaken. So, that's why I don't call currencies.
As we kick off the new month, are there any lingering concerns that we may have been carrying from, April on or from May on to this particular month?
I think the main thing is what we've touched on is around inflation. The market still hasn't decided if the current increase in inflation that we're seeing, particularly in the Northern Hemisphere, is that temporary because of supply bottlenecks, or is this going to be a more permanent story driven by increased monetary stimulus from governments and central banks? Jury's still out on that, but stock markets in general are very, very sensitive to interest rate changes. If inflation is only temporary, we're going to see stock markets stay high and inflation and interest rates stay low. If inflation is here to stay, we're going to see those interest rates go up, and we'll probably see softer stock markets for a while.
We have the U.S. jobs report numbers on Friday. I mean, why is this particular report so important and what are investors looking for?
So the big thing, the US economy being the biggest in the world, whatever happens there obviously impacts the rest of the world. The economy is predominantly driven by consumption. And that means that people need jobs to consume. And if people are employed, they can consume, and it means strength for the economy. It's the reason why the currency and the stock market is so influenced by whatever happens with the US job numbers. The expectation is if the numbers are really, really weak, you might actually see the stock market go up because it means a lot more monetary stimulus. Where on the other hand, strong numbers could also be a good thing because it means a lot more consumption in the economy in the short term. So it's a tricky one. Generally, the market likes numbers to land in line with expectations, and then you see the market doing okay.
Today was a quiet day on the results front, but going forward, are there any company numbers that you are looking out for, any particular shares?
I think the main one we're looking at from Investec's perspective is the NASPAS process at the end of the month. There's been a lot of pressure on management recently to say, hey guys, your performance has been really well, or your share price has been driven by Tencent and all your other side bets that haven't done so well. It will be interesting to see how those side bets have now fared over the last 12 months. And then we also get more news around the proposed NASPAS process merger, reverse merger, snake eating another snake, very confusing transaction that management's proposing.
All right, Michael, thank you so much for your time. That is Michael Traherne from Investec Asset Management, taking us through what is happening on the markets at this particular point, but also giving us an indication as to what he's looking out for when it comes to company news and numbers going forward. We're going to take a quick break, and when we come back, we'll have more news.